In the last session we were looking at trend lines and some of the price behavior, price action we can expect around those trend lines. In this session I wanted to show the practical application of those ideas or that type of thinking by applying it to a few different charts. So I'm going to be flicking through maybe a number of different pairs, and we'll be looking at different time frames, and really the purpose of this exercise is just to observe that price behavior, to realize that this behavior, this pattern, is something that repeats. It occurs over and over, and when we see a consistent behavior in the marketplace, that gives us the confidence to take advantage of it. Before I actually go ahead and start drawing some lines on the chart, I just wanted to mention a quick word about bias. Often you'll read in various trading texts, perhaps on forums also, that as a trader it's not a good idea to have bias. You need to follow the price, and as a general rule of thumb there may be some wisdom in that, but if you're going to place a trade, at some point or another you're going to have to develop a bias to say that this instrument, the price, is expected to head north from here, so I can take a long position, or it's expected to head south from here, so I'm going to take a short position. One of the most well risk defined places at which you can establish a trading bias is a support and resistance zone, and as well at a trend line which has been breached. I mentioned in the previous session how when price approaches a trend line we're better off assuming that the price is going to hold. I also showed the kind of price behavior that we're looking for, which would confirm for us and give us a positive expectation that that scenario is going to take place. As well, I gave an example or a couple of examples of the way that we will witness trend lines breaking, and I also mentioned that being a conservative trader, it's not often that I will trade the actual trend line break itself. Rather, I usually wait for a retest of that trend line, and that is where I'll be prepared to take an entry, and usually the nature of that entry will be an aggressive entry, so I won't necessarily be waiting for price action to confirm. Rather, I'll be pulling the trigger with positive expectation about what's going to happen next. The first chart which is up on screen is the Aussie dollar. It's had a fantastic run over the last couple of years, and the trend line which I'm going to draw for you, in fact there's a number of I think usually if you zoom out the places where you're going to be drawing your trend lines, the areas that you're going to try and interconnect, they tend to become pretty obvious. And here I just want to demonstrate one particular trend line, which if we just take the highs of this 4-hour consolidation, what we see is a very clear breakout of the trend line over here. And if you just give me a second, I'll change the colors to make it more easily perceivable. There we go. So we see a very clear breakout, and we see the price accelerate away from the trend line. It pulls back to retest that same trend line, and we have a positive outcome if we were lying in wait for that particular trade. Another example, if we're looking at pound Swissy, and here we're just on a 5-minute time frame, something that we might be looking at for a intraday trade. We've looked at pound Swissy before. It's had a very volatile. It's shown very good volatility over the last couple of months, and volatility is always good. You have more chance of trades getting into profit quickly, which I think every trader likes to see. No one likes to hang around a trade which is going a few pips into profit and out of profit. So the volatility that pound Swiss has given over the last couple of months, I'm sure it's been very good for a lot of you. But here's a 5-minute chart, and if we just connect the lower trend line on these 2 points here, we can see that once the price broke, and if you remember, one of the types of consolidations which I mentioned on the trend line is where so I'm just going to tighten up this trend line so it's going point to point, and then we'll have a very clear example. I mentioned in last night's video how sometimes when price reaches that trend line, it can consolidate over and under that trend line. That's exactly what we see happening here. That consolidation was followed by a break, and subsequently there was a pullback retest of the trend line here, and that gave potential, if that spikes anything to believe, to take at least 40 pips out of that trade, or some portion of that 40 pips. So it had good potential to do that. But really here, I think the thing to concentrate on is just the model. Concentrate on the actual price behavior that we're witnessing around the trend line. It's a common structure you'll see occurring often enough. Trend line break where the price crisscrossed over and under the trend line, or tactically on the trend line before it gave the break. So if you were sitting and lying in wait for the retest here, you would have had a very successful trade. If we come back and look at the Aussie chart again, and what you'll see here is that the trend line break was fairly clean, so the price happened to push straight through that trend line without zigzagging over and under it, which as well, very common occurrence, and as well it shows a lot greater intent in the market sentiment at that time when you see it happen. But in any case, whenever there's a trend line break, it's always good to sit up and pay attention. Here we have a chart of Euro GBP on the daily time frame. Again, if I'm taking the historical highs here in order to draw trend line, and just by connecting these points, you see something very interesting here. That again, here we're on a daily time frame. We see that the price crisscrossed over the trend line. I'll just zoom in so that we can get a better idea of that. The price crisscrossed on the trend line, and after that it continued to break north, which we see in the move here. It's a daily time frame, so obviously in terms of the magnitude of the move, it's going to reflect the time frame that we're looking at. But the move here was in the region of 330 pips, and the price pulls back, almost a clean retest of that trend line, and it looks as though we may have had a slight overthrow, but by daily time frame standards, having an overthrow of 8 or 9 pips wouldn't be considered overly it wouldn't be considered overly problematic. After the trend line has been retested, again we see a fairly swift movement north in the first instance, almost 300 pips, and in the second wave an additional 300 pips. Now I started introducing this session by talking about bias, and I think it should become clear that there is a point at which you have to establish bias if you're going to take a trade. And even though the price was moving towards that trend line, we had positive expectation in terms of the price action that we'd expect around that trend line, and as well this chart demonstrates a positive result in that regard. Here we're looking at a chart of pound against the Aussie, and I just want to demonstrate another kind of principle here. I'm drawing a trend line connecting this high here with the highs over here, so we can see that this line was actually holding the price. We have a breach of the trend line here, and after that breach the price, we're on a H4 chart here, so actually maybe if I just adjust the time frame, we'll be able to get a better look at that. So we have here a breach of the trend line. The price pushes forward almost 140, 150 pips, pulls back to the trend line, and the trend line is providing support, and again pulls back to the trend line again, and again the trend line provides support. Now one of the things which you can do with trend lines is that, and it's a fairly straightforward thing, is that you have to play around with them, connect the highs and look for the relationships, look for a trend line being breached and a successful retest of it. If you found that a trend line has been retested successfully once, then every indication, is a good logical rational approach to it, would be that if the trend line held once, then that line should hold again, and so you can see that the second test is successful. You'll also notice certain nuances when you're drawing these trend lines. You can select and copy the trend line to a previous high or low, and find a new relationship develops between the price and trend line. Here I've connected the trend line to the low over here before the actual breach of the first trend line, and we can see that when the price pulled back, this new trend line acted as support once, twice, and as well it acted as support here, which was just prior to the NFP release at the beginning of this month, and the bulls were able to carry that to the tune of almost 380, 400 pips, which shows significant support at that line. So if the price were ever to pull back again, would be looking at that area and would be looking certainly for a bounce off of that trend line. Another chart that we're looking at is the Kiwi dollar, and here if I draw an upper trend line between, if I just draw an upper trend line there, we can see how price has come to a stall. It's tried to push through this trend line, but for all intents and purposes it's come to a stall at this trend line, and that stall, the longer that stall lasts, the more it would indicate that a short is on the cards, and that would be the bias as long as the price is tapping underneath that trend line. There are, however, a number of ways it could play out. I've just drawn them on the chart there, and so I'll be watching this one closely in the coming days to see how the picture develops, and depending on the price action I'll take my shots. That's all I've got time for today, and we'll catch up again in the next session.